Hi guys, welcome to yet another video. In this video, we will explore the best times to trade Forex, the different trading time zones, and why choosing the right trading time matters. The Forex market tends to be more or less active within certain time zones. Some time zones have higher price movements and liquidity than others due to the fact that there just happens to be more people awake and available to participate in that market. And other time zones have more people sleeping and only a few participating in the market. Understanding this can help you maximize potential profits and minimize risk, making it a fundamental skill for any Forex trader. If you're trading Forex, the markets are open 24 hours a day, 5 days a week, and close on Saturdays and Sundays. That said, the best time to trade Forex is when there is an overlap between the different trading time zones. And I will tell you why that is. Keep watching to see a graphical and chart illustration. Now, when you're trading Forex, it's important to be aware of these different time zones. That is especially true if you are a day trader. Swing traders will see less impact on their trades, if you will. Remember, the time zone you're trading in makes such a big difference. Here is a table showing the different time zones during the days when the Forex market is trading. By the way, we are using Eastern Standard Time on these charts for this video. Asian session is from 6 p.m. till 3 a.m. That's when the banks in Japan, Australia, Singapore, and other Asian nations and countries are doing business. As the Asian session draws to a close each day, there is an overlap with the start of the European session, which runs from 2 a.m. till 11 a.m. when the banks in the UK, France, and Germany are open. And as the European session winds down for the day, there is a 3-hour overlap as the US session kicks into gear. It's open from 8 a.m. till 4 p.m., which are hours when the banks in New York, Chicago, and Los Angeles are doing business. After the US session closes, there is a bit of a dead zone from 4 p.m. till 6 p.m. It's the slowest time of the trading day in terms of liquidity and volatility since there are no major banks or markets open. Make no mistake though, you can still trade during those hours, but there is a good chance that the spread between the bid and the ask of the currency pairs will widen quite a bit due to low liquidity. Again, a dead zone is more significant if you are a day trader than a swing trader. To illustrate the best times to trade, here is the same time zones in a graphical format. It's easy to see the overlap between the Asian and the European session and between the European and the US market. It's these overlaps that allows Forex traders 24-hour access to the markets 5 days a week. Now, let's take a look at the typical day in the Forex market by charting the euro-dollar currency pair. You can see some movements and liquidity during the Asian session, but it's not the most volatile time of the day for the pair. It picks up during the overlap between the Asian and the European sessions and strengthens during the European sessions. It's usually at its peak liquidity during the overlap between the European and the US session. That makes sense because during those 3 hours, the largest banks in the world are open. Volatility is usually high during this time since there are massive orders being injected into the market, creating price movements, especially during the native currency pairs of Europe and North America. As the European session closes and the US session continues, you can see the active volatility. The dead zone begins after the US session closes when liquidity shrinks and the spreads widen. For the day trader, it's important to identify quality zones during the most liquid hours of the day. Those during the overlap between the European and the US sessions from 8 a.m. till 11 a.m. Eastern Standard Time, as well as during the US session. Definitely urge caution when trading zones created during the dead zone hours from 4 to 6 p.m. You might see a good zone in there and want to trade it, but remember it was created during very illiquid hours. Why is that bad? Well, let's say you might see a quality zone in there that you might want to trade, but when you check the time, you will see that it was created during the dead zone hours after the US session had closed and before the Asian market opened. The driving force that created that zone is the imbalance between buyers and sellers, but it was a small battle, meaning very few participants. So, keep your focus on zones you target during the hours when liquidity is very high and ignore the ones created during the hours of low liquidity. Those will get blown right through. So as you progress, track your results at different trading times. You will probably discover that you trade better and worse at different points in the trading day. This has a lot to do with the markets that are open and the liquidity that they provide. Remember, it's good to keep your focus on trade setups and zones that are created in the overlapping sessions of the market. That would be between the Asian and the European sessions or between the European and the US sessions. Even better, look for currency pairs in the native currency of the overlaps. For instance, Euro-Yen during the Asian-European overlap and Euro-Dollar during the European-US overlap. Thanks for watching, guys, and if this video was helpful to you in any way, do not forget to click the subscription button to get more of these educational videos. Until next time, bye-bye.